The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 25th, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to have an extraordinary day, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but way, way, way more important than that, during this next hour, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you can't dial in, we've got you covered. Let those fingers do the walking. Send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And, of course, in our Tiger's Den, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, all indices in the red. Dow leading us down 170 points. Been about a 310-point move from top to bottom in the futures so far today, off about 0.6%. Same thing for the S&P, down 17 points. NASDAQ 100 off 1 full percentage point, currently trading out at 79.31. Russell's off 1%. Semis off 1.5%. New York Stock Exchange down about 0.5%. So everything is mean and red except for the spot volatility index, which right now is trading up 10.11%. You're going to want to watch the end-of-day reading on that. Right now, you've got the spot trading at 13.29. So if it's trading at 13.29 or higher, you're going to end up with a one-day rate of change of 10% or greater than 10%. And that typically leads to a bounce or at least stalling. We won't call it a bottom because we're already at a high out here. But so pay attention to that. Do not, if you do see greater than 10% one-day rate of change, don't be surprised to see a rally in the futures market at some point in time when you get up in the morning. But we're not there yet. It's going to be the end-of-day reading that is muy importante. Gold's off $11, silver down 24 cents. Leading the charge the upside, it's Anika Therapeutics up $13 and change. That's 33%. Beyond Meat, beyond my comprehension, but be that as it may, it's up $11 and 5.5%. West Pharmaceuticals, if I want fruits and vegetables, I'll just have fruits and vegetables. Okay, West Pharmaceuticals up $10 or 8%. Meritage Homes is up 16% or $8 to the downside, and I do mean to the downside. It is Align Technologies off 76 buckaroonies. That's 27%. To the downside, volume there about 7 million shares so far. Lending Tree, TREE, down $67 as well. That's 16%. Tesla's off 14% or $36. GMAC, really World Acceptance Corp, WRLD, that's down $33 or 20%. AutoZone off 21. Plenty of action. Jackson in the market. Let's go to our first question that came in earlier. That was from Craig E. And Craig wanted to take a look at Boeing. Craig is short Boeing and is just asking for some support levels as to where, and he's looking for support levels over the next couple of weeks. So first thing, though, Craig, is understanding the big picture or the bigger picture inside of Boeing. And to do that, you and I, we take a look at the monthly chart. Now, in the monthly chart, we had price moving higher, doing less relative energy, creating that Rhodes momentum indicator top. It did that when there was a key reversal monthly bar, as well as a bearish engulfing session out there. Price is trading below Stevie's green line. That's at 392.11. And so where price is headed to inside of Boeing, very likely its support level is 316.14 on a closing basis. That happens to be the bottom of its monthly profile. That's the level that I would be watching for. If you see a close below 316.14, well then, Craig, Boeing could easily head back longer term to its original breakout area, which is 184.53. So your first target, I would say, is 316. I know you asked for a couple of weeks. I don't want to sit here and try to time it for the weeks. You just simply have a very nice topping pattern inside of Boeing on a monthly basis. On the weekly basis, top with a TD setup 9-count pattern. This says 309.40, so you can watch that level. If price were to close below 309.40, that lets you know that price is moving lower. Go back to look at the weekly targets that we looked at. And on a daily time frame, as we pull over its chart, just to see if there's any type of bottoming signal pattern or anything forming out here, you're going to want to watch the low from June. That could be support. That's where it formed that hammer candle, creating that Rhodes momentum indicator bottom, that number 330.67. So first stop looks to be 330.67. A close below that, you'd have the old, if you're long, you're wrong, when you close below the bottom of a hammer candle. So all looks pretty good right now inside of Boeing. Hope that helps you out. Best of luck with that trade. Let's go take a look at the markets, try to get a feel for what they're doing out here. Let's make sure that we stop just for a moment, take a quick breather. That's right, everybody with me, breathe in nice and deeply. Now, actually, I can't breathe in because I'm speaking, and so more is coming out than is coming in. But to get a feel for what the markets are doing, let us not forget where we are at. And when I say where we are at, I'm not referring to the fact that I'm in Delray Beach and you are someplace else. I'm referring to where we are at in the seasonal cycle for the Dow, which says that the Dow should form, typically on average, forms a top knocking at the door this week. On my chart here, it shows you July 21st. We don't hold July 21st as the specific day necessarily, but this is the pattern. This is the cycle that we're in. When we see these set up, it's really important for us to go take a look at other patterns that are applicable in the market to try to get a feel for what's going on. So let's go do that. Excuse me. Let's start off by taking a look at our ES Mini, the S&P futures contract. What do we have out here? Hey, we've got two beautiful topping patterns as we speak right now. We've got the wave number 7, that's letter G. We've got the bear sash candle as well as we speak right now. Of course, it depends on where the close is at the end of the day. If the close is below yesterday's open, then we'll have that bear sash candle out there. And that's also coming, did I say wave number 7? If I didn't, I did now, along with the Rhodes momentum indicator, which we previously had one of those signal on July 16th, and that one is still active. So what does that say to you and I? That says to you and I, price should move down depending on the close today. If we do get that bear sash candle, that would say that price should go down and revisit 29.6950. I'm not saying when. I'm not saying it does it today or does it tomorrow out there, but that would be the meaning of this. And if we see it close below 29.6950, then what that's telling us is the seasonal cycle has indeed kicked in. And yesterday, being July 24th, just 3 days after the average date of July 21st, wouldn't that be spectacular out there if it worked like that? The question is it really that easy? The answer, my friend, is yes, it is. Steve Rhodes with TFNN. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's off 173, S&P down 17. Now, how is it that I can say that the ES Mini should go down and revisit that support level, 2969? Well, one of the ways that you and I will make that determination by the end of the day is, remember yesterday you and I were taking a look at that advanced decline oscillator reading inside the New York Stock Exchange. Of course you do. And we were talking about how, hey, it had bopped its head up above the zero line, and we said, just bopping your head up above zero doesn't mean a thing if you ain't got that swing, and that if the advanced decline oscillator closed back below zero, it was communicating to us that sellers were always in control of the market. And right now it's down below zero. So what this tells us that sellers were always in control. That's how Stevie reads this. And if they're in control, then they ought to be able to push price back down to 29.69. I'm not saying that it's going to take place this afternoon again or tomorrow, but that's what the message of the markets is. It's especially the message of the markets as of 119. It still doesn't take away from the fact that if you do get a one-day rate of change in the spot volatility index above 10%, the most bearish thing out there, so if you're a bear, and the most bears would just love to see just simply a 300 or 400-point move to the downside, which is fine, but you'd want to watch that 29.69. But the real more bearish thing, the more subtle thing, is just to have a close right around here, give or take, and have that spot volatility index down less than 10%, because then there's no reason for the bounce. I can't tell you why it happens. I just know that it does happen. How do you know that it does happen? Well, because I track it, because you track it out there. We always track it. We have to track it. Here we do. We take a look at the spot volatility index, and we take a look at rates of change above 10% and below minus 10%. Below minus 10%, you know, lower than minus 10% out there, and they're marked, they're designated on the chart out here. You go take a look at it. Usually, if it's a one-day rate of change of below minus 10%, it's an initiation move. Last time we had one initiation to higher prices. That's what it typically means, and that's what took place on June 4th out there. So that's what we want to be watching. Hey, we don't have to stop there. We've got more. What do you mean we've got more? Well, if we go take a look at the NQ, which had a heck of a nice day yesterday, and what that heck of a nice day did was it got to wave number 7. They're singing in the key of G unless there's a higher high today. That will be the topping signal that's out there. You've got a small A to B equals CD. That completed. Right now you've got a bear sash candle as long as price closes below the open of yesterday. You would have that, and you'd have the confirmation of the sell the D point pattern that is out here, as well as wave number 7. That says price then ought to revisit 77.94 to 77.43 out there. That's what the NQ would be saying. Question, what you do with the NYA data? Why do you not do the same with the NDX? Because I don't have the advanced decline data for the NDX 100. I can do it with the NASDAQ composite. John, I'm not going to be able to do it here. I don't want to waste the time during the show here. I'll try to get that going for tomorrow. For the composite, I do get the data through my eSignal application. So here, that data, all that I'm using, just so you know, I'm just using this right here. I'll just put the chart down. It looks like a lot of dots. It is a lot of dots. Let me just change this from a dot chart, so to speak, to a line chart, and then you'll kind of from a candle chart to a line chart. There we go. So each day, what I'm doing is I'm just simply taking the net advancing or net declining data. So I'm taking advancing less declining issues out there. And because I get that as a data feed, most people get that as a data feed. On my system, it's $ADD. That's going to be the net between the advancing and declining issues out there. I get the same thing out here for the NASDAQ. You'll see just down below here, I'll put it up on my chart. This is showing us the net declining or net advancing issues. Right now, you've got 1,163 net declining issues, and I don't get that for the NDX 100. I used to. I did subscribe to a service where I got it for everything. I had to manually do the work, and I would do it on weekends, and unfortunately, that service is gone. It's out of business, and so I can't do it for the other instruments out there. I can get it for the Dow, but with the 30 instruments, it's kind of like, why? Why do it? We don't need to do that. So hopefully that answers your question out there. What we can do, though, for Market Breath, and I can share this with you then, and this helps both you and I, because your question was about the NDX 100. We go take a look at Market Breath data for the NDX, and we can do that through our TAS market profile tools. Now, not the same as the net advancing or declining issues, but this tells us where the number of issues trading above the top of their profile doesn't tell us whether they've topped or not, but the number of issues trading above the top of their profile, their daily profile, I should say, because we're in a daily time frame. Well, that's 39 issues and 26 constituents where price is trading below the bottom. So you and I, we use those levels, the top and the bottom of the box, to assist us with our trading and investing. Let me give you an idea of what I really mean out there. So let me show you, it's just so you can, when you see it in real life, when you really see it out there, then you understand at least how I think. Maybe you understand how I think. I don't even understand how I think, although I think I understand how I think, if you know what I mean. Just get to it already. All right, so if we're just going to get to it, and we're just simply going to take a look at our market profiles, we'll just take a look at the ES Mini out here. This is where understanding the power of the bottom of that box or Market Breath can really be of assistance to you. And that is this. It's really simple. Just talk about the basics. Basics 101 when it comes to TAS market profiles. In a bull move out there, you don't get excited about pullbacks and retracements and think that's the end or that's a change in trend. You only do that when you see a close below the bottom of a profile. Otherwise, the bottom of these boxes, as those green arrows show us, they are the buy the dip opportunities out there. And we had a buy the dip opportunity out here Friday and Monday of this week. On Friday, price came right down to the bottom of that box. We talked about that earlier in the week. 29.6950 is the bottom. The actual low of Friday was 29.6950. How that works, I don't know. I don't need to know. I just know that it works out here. So as we take a look at this, we know that we won't have a change in. Now, when you get a topping signals just say you're going back to support, or you should go back to support. Well, in this case here, the ES Mini went right back to support. And so we're going to watch that play out again. We'll especially watch that play out again if price can get below and stay below 3,550, because that's the center of the box. Remember, at that center, it's a bear structured box out there. Once you get below the center, because that's where both buyers and sellers believe there's fair value, and knowing that there's sellers at 30.2350, once you get below that center of the box, odds favor you're going to be able to push yourself down to 29.6950. If tomorrow afternoon, now we'll be doing tomorrow's show at 8 a.m. So it'd be really helpful for you to tune in there. Of course, I'll make it pertinent for the 1 to 2 o'clock session, but it'll really be about 4 o'clock as far as trying to understand what the weekend message might be. If you see a close below 29.69.50, it's giving you odds on that you now have, it has, not you, but it has changed its trend. If that's going to happen, if there's going to be a change in trend, then what you're also going to see, and I'll put the S&P 500 market breadth out here, you also, or should see a crossover, meaning bearish crossover, meaning that more constituents are trading below the bottom of their profile on a daily basis than above the top. Right now, it's 171 above and 129 below. And what does that tell us then? What that tells us is neither bulls or bears should get comfortable out here. We're trading in a bit of sideways range out here, a little sideways consolidation. I don't know who's going to win. Seasonally, the sellers should win. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Hey, John, here you go. Here's the advanced decline oscillator reading for the NASDAQ composite. Right now, it is below zero. It's at 2150 out there. You know, what's the importance of that? It's really pretty simple. If you just take a look at it in general, let me just draw a little bit of a yellow rectangular box here. where price is clearly above the zero line out here for the NASDAQ composite. And then let me just try to line that up with the market up top, and we come to about right here. So here on the bottom of the box, you can see the advanced decline oscillator, and with the exception of a couple of days out here, June 25th and the 26th, it was above zero. So I'm just really going from June 6th, in essence, to about July 17th, and you can see the price behavior of the NASDAQ composite. Likewise, if we come down here, if I just get rid of those boxes, right? And so if I get rid of these boxes, and here, let's just come back to this area. For right now, which is back in August of 2018. And here's a clear area where price was below the advanced decline oscillator reading. And let me just try to line this up here. No hocus pocus. So we line it up right here. And here you can see, in essence, a sustained move lower or sideways. In other words, the NASDAQ composite was not moving higher with that advanced decline oscillator reading down below the zero line. There was a day here where it poked its head above zero, looks like on September 20th. So that's the reason to just use something as simple as this. This doesn't take any kind of rocket science, doesn't take any technical knowledge whatsoever, other than just being able to get the data and being able to put it on your system out there. So I had a question. So hopefully, hey, we don't have to worry about doing it tomorrow. We just took a look at it right now, but we'll take a look at it tomorrow. But Jeff writes in and says, hey, Steve, can the markets really go lower with the Fed reducing interest rates? And I'm glad that you wrote in, Jeff. I had somebody write in last week as well, or maybe it was the beginning of the week, asking the same question, and I answered that one by email. Let me just put this to sleep. Now, this is a monthly time frame chart that you're looking at out here, and because it's all BS, Jeff. It's all before Steve shared with you this information. And really, quite frankly, the stuff that the folks on TV give us about the whole interest rate thing, it is BS out here. Let's just take a look at facts. Just simply stick to the facts. I want the facts, Jack. What movie did that come from? I think it was Stripes, wasn't it? Was that Bill Murray? Something like that. And anyway, let's just go back to 1992. The top portion of this chart here is the 13-week T-bill. So we're taking a look at short-term interest rates, which in essence is what it is that we're talking about. And what we can see is back in September of 1992. Yeah, so we're just going back a few years because that's how we do things around here. We take a look at facts. And so interest rates, short-term interest rates from 1992 up until 1995 were on the increase out there. The bottom part of the chart here for the S&P 500 also increased. Didn't move lower. Let's come back to another period of time where we saw continual increases in short-term rates out there in October of 1998 up until October of 2000. And what did the S&P 500 do? It moved higher. Let's come back and take a look at back in 2003, June 1st of 2003. That was a low for short-term or 13-year week T-bill rates out here. They continued to move higher up until about, it looks like, February of 2007. And what did the S&P 500 do during a raising rate environment out here? They went higher. Now, rates really didn't begin moving higher here in the U.S. until about August of 2015. And since August of 2015, which was a bottom, what has the S&P 500 done? It's moved higher. So this whole interest rate thing is nothing more than bogus BS. If there's anything, any one thing, there's plenty of things that could really get me ticked off here. That's one of them. How is it that financial media folks can regurgitate that stuff out there? When interest rates are moving lower, take a look at the opposite. When interest rates begin moving lower, such as they did here back in 2000, down to 2003, what was the S&P 500 doing? It was moving lower. What did it do out here from 2007 down to 2009? What were interest rates doing? Moving lower out there. And then the other thing, Mario Draghi and our Fed, Jeff, telling us that somehow they can control inflation. Holy shnikes out there. I mean, goodness gracious. They can't control inflation. Inflation's going to get out of control when it starts moving higher, and inflation always happens when people have no confidence in government. And you can kind of guess what kind of confidence I have in the folks that put this stuff out there. It just is, there is no factual basis for it whatsoever. None, zero, zilch. All we have to really do is really look at the charts. So, Jeff, I'll just simply go back. We just take a look at the patterns out here. We pay attention to those. I'd rather us pay attention to things such as the market profile support to help us identify changes in trend out there. If we do that, you and I are going to be just fine out here. It just gets us back to now, there's a problem in River City out here. The Dow, for example. The Dow, as we take a look at it, it's back below the bottom of its daily profile. That's 27,175. So now let's go back to the futures contract, or maybe we'll go take a look at the cash indice out here. If we go take a look at the futures contract for the Dow, see what it is that we see out here. What do we see? We see that Stevie's green line now is starting to act as resistance. We see that if Dow really gets romping and rolling to the downside, support 24,826 between now and October. That gets us back to the June area. That is likely where price is headed to over time. But we're going to need that market breadth that you and I looked at in the S&P and the NDX 100 in order for that to take place. So we've got right now confirmed topping patterns in the ES inside the NQ. We just need to wait to see how the end of the day plays out and where things close before we actually make a commitment to that. As we take a look at the profile levels, the NQ is really trying like hard to form a new weekly profile. It keeps coming and going. It keeps changing. So we're not going to spend much attention to that until we get some traction here. But the bar color on this NQ chart, that's chart number 2 from the left, is turned orange. It also tells us there's a new daily profile that is attempting to form. I was trying to figure out what those profile levels were, and even my advanced Doppler system wasn't picking up on it just yet, but I do know to be paying attention for that and looking for that inside of the NQ. That's important because that will give us new support, or could give us new support and resistance lines out there. If we go take a look at what else is moving the markets, you've got gold moving lower, you've got T-bonds moving lower. If we take a look at Goldilocks, I have been out there on Stevie's trumpet saying, be careful, be careful, be careful. It is a bull trap out there. When we take a look at gold, at least the way that it makes tops and bottoms, well, in this case here, it's got 2 of those topping signals, really 3 to a certain extent, but we'll just go with the 2. Wave number 7, that's letter G, and the Rhodes Momentum Indicator top. Now, gold will not change its trend until it busts through support. And that's 1391.70. So if you're long, keep adjusting your stops. You see it close below 1391.70. You're staring at 1336 and then 1272. 1272 longer term. That's where Goldilocks is headed to, and nobody will like it. And that's when you and I will just fall in love for a long time with gold.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Dow's off 142, S&P 14. Ben writes in. I think Ben is from Hawaii. Mahalo to you too, Ben. Ben writes in. Can we look at the Russell futures contract for TAS profile? So we most certainly can. Let's look at the daily chart out here for the Russell. So interesting chart for you. I don't know if I'm assuming you're trading it, but whether you are or you're not, really a great example of how these profiles work, support and resistance. What we know is that Ben, when this profile formed back on July 3rd out here, we knew that it was bullish in structure. We knew that because the center line at 1534 was closer to the bottom at 1527, of course, and it's a wide box versus 1585. Well, price yesterday made its way up to that 1585 level, got up to 1585.90. 1585.95 was the price point of the top of that profile. We can see that price has rejected it. It's moving lower out there. Now, price has never explored the center or the bottom of that box out there, so it's the 1527, 1534 level that you would be looking at. You didn't mention the time frame out here, Ben, but this is the daily time frame. The weekly I'm not going to spend any time on and take a look at. We can see the consolidation. If you were to ask me as an example, hey, Steve-O, what's the Russell 2000 doing on a 30-minute chart? Well, then I actually wouldn't bring over the profiles. I mean, I could, but I won't. And the reason is I'll just pull over this chart here. And this uses Stevie's support and resistance levels. It's not really mine. It was created, the system or the tool itself was created by Tom DeMark. I use it out here. And what we know, Ben, is that when we see a 9-count setup, now, a 9-count setup says, in this case here, price moving lower. If this is going to be an active 9-count setup, the low would need to occur on either bars 8, 9, or the bar following 9. We're in right now the bar following bar 9, but we can see that 8 so far is the low out here. So assuming that this pattern continues to hold up until 2 o'clock, we could see a bounce or bottom, quite frankly, inside the Russell 2000. So if you were to ask me, is now the time to go short to try to catch price moving down to the bottom of that profile? Steve-O, based on a 30-minute chart, would answer no. You don't want to do that. So hopefully that helps you out. Let's go out to Kansas City and speak with Robert. Robert, thanks for calling. Thanks for holding. How are you today?
Hey, I'm doing great. Thank you so much for taking my call.
My pleasure.
I have been watching gold, particular GDX, for a while, waiting to short it. And I just heard you talk a little bit about gold earlier, and I wondered if you could share with the audience what you gave, like a change in trend or change in direction for gold. What would be your support line or your change in trend number for GDX?
So here's what I'm going to do so that it's a great question, and I'm going to look at 2 daily charts And so hopefully you're watching this on Tiger TV, or you can go catch the archive on YouTube. Just type in today's date, the Trader's Edge with Steve Rhodes, and it'll pop up. It takes a little while for the production guys to get that populated on YouTube. But if we take a look at gold on the right-hand side, Robert, what I'm talking about there, in order to generate a change in trend, is the bottom of its daily profile. And that number, again, for everybody is 1391.70. And the reason I pulled this chart out is because on the left-hand side, the black-colored background charts are the GDX. And what you can see here in the GDX, right now, it's testing, or has tested, the bottom of its profile. That daily profile out there, bottom, is at 2739. Now, you could get a close below the bottom of that profile, which could indicate to you and I a change in trend. But the instrument that really directionally drives GDX is going to be the gold contract. So you really need to, for the trade to truly work out and be successful, that would be shorting the miners out there. You really need to see gold fail that support. You know what I mean?
Okay.
Or if not,
yeah,
so like if you were just asking what the number is for the GDX, I'd say it's 2739. What I wouldn't want you to do is like back up a truck and say, okay, Steve says because we closed under 2739 and the GDX, there should be a change in trend. I'm saying, no, that's not the case, because until gold breaks support, it could just be a retracement inside the GDX.
Got it.
Am I clear? Or
well,
I want to really, because if you didn't get it, I want to somehow try to restate it, because it means others aren't getting what I'm saying too.
No, I'm hearing what you're saying. You're even though you might trade the instrument GDX, your primary focus is looking at the chart for gold.
Yeah, and exactly. And it's really because of this. Let me see, as this pops up here, maybe this, we might be lucky enough to have gold in the GDX. We do. So it's really this chart here that shows you what Stevie is referring to. And that is, the top portion of this chart is the gold contract. The center portion is the GDX. And the bottom portion is the correlation tool. Now, what the correlation tool looks at, Robert, is the directional correlation, meaning is price moving up, then both instruments are moving up. And if so, then the bar is above the zero line. And you can see there's only maybe 2, 3, 4, 5, 6, 7, 8 bars below the zero line, going all the way back to June. This is sent as at a 10-day average out here, but it just shows you the importance of the directional correlation between the two. So I'm not saying that the GDX would be wrong. Maybe it's given an early signal out there. But it's really going to, in my opinion, it's really going to be all about gold's price action in relationship to its market profiles than the GDX with regard to its market profiles. Okay?
In the GDX 39, that's a daily? Is it you have a different profile if you look at it on a weekly basis? Or
yeah. So let me pull that over here. Let me just increase my volume. So on the weekly basis, so let's say price close under 27.39. If we just use profiles, that's under the daily, then that would say that price should pull back to 26.25. That would be the top of the weekly box. Sometimes old resistance can act as new support. On a weekly basis, it hasn't been tested, so we don't know if that is in fact the case, but that would still be the next target to the downside. If price were to close below 26.25, then that would say 25.05 or 23.85 would be the price projections. And then the top of the monthly profile is 20.29. So we're not going to look at the longer term pieces of it. I will share with you that the GDX this week, which made a higher high, this week will be bar number 9 of a TD setup 9 count out there. So effectively, this would be supporting a weekly high out here as well. But I still will come back and say, from a gold standpoint, I really need to see gold close underneath support of 1391.70.
Okay. Well, thank you for your time. I appreciate it.
Hey, my pleasure. Thanks so much for calling in. That was Robert in Kansas City, and we just looked at gold and the correlations between it and the GDX. GDX. So right now we got the Dow off 138, S&P down 13, NASDAQ 100 off 72. So everything's still mean and red. Spot volatility index only up 7% right now, up 86 pennies. Silver down 19 cents. So we're just about to go to break. Then we'll do our 2-minute wrap. Don't forget, tomorrow morning I'm going to be recording the show between 8 and 9. So stop in, have a cup of Java, a glass of tea, a smoothie. Join me live. Steve Rhodes with TFNN. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. Tom O'Brien published the 900th issue of his weekly newsletter, The Gold Report, on July 22nd. It's amazing he started The Gold Report more than 17 years ago when gold was trading at only $252. To celebrate, we're having a special Tiger Dollar sale. Right now, you can spend only $495 and we'll give you 200 extra Tiger Dollars, so you'll end up with 695 Tiger Dollars, which is the yearly price of The Gold Report. Tiger Dollars can be used for any TFNN newsletter or service, and this offer is open to new and current subscribers. With gold making 6-year highs and gold mining equities trading higher, this is a great time to sign up for the Gold Report at a dramatic savings. For all the details, visit the front page of TFNN.com. This deal ends July 31st, so don't miss out. Get your Tiger Dollars and sign up today for the Gold Report 900th issue sale.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So let's take a look at this gold contract. Let's take a look at a couple different time frames. This is a 5-minute time frame. This is just one of our traders inside the den, something to be focused on, paying attention. So the 5-minute chart. Now, the way that these green lines are resistance, red lines are support. And the easy way, just simply using that TD setup 9 count, is once support gets broken, which here as we take a look at this 5-minute chart, once price closed below 1426, said that it was headed lower. We can see it formed a little TD setup 9 count. It moved sideways and bounced before making its next leg lower. Earlier this morning, was it this morning? Yeah, we can take a look at 1416.30. Once price got below that, it was off to the downside. Now what this did on a 5-minute chart was this bottom with a TD setup 9 count. It did it on bar number 8. We're now into bar number 9 on a 5-minute basis. And if this can make a higher high above, can I grab this here quick enough for you? The current interest, the 14, 16, 10. If it can get above that, but yet stays below 14, 17, 40, just to be specific, and forms a TD setup 9 count below resistance, that oftentimes is bearish. If price can close above 14, 17, 40, says that it wants to move to higher ground. If I look at a 10-minute time frame chart, again, I don't know what it is we're going to see, but we're going to see this populate. When it bottomed out here on a 10-minute basis, you've got that TD setup 9 count that formed the bottom. That's clear. And this says 14, 19, 60 would be the resistance zone. So there's your resistance zones. Let's do this one more time out here. Let's hear it for the band. This is the 15-minute time frame. 15-minute time frame showing you a TD setup 9 count bottom and showing you 14, 20, 10. So best of luck with that trade, but those resistance levels are what you want to see that fail, and that would suggest more counter trend or more rally left in Goldilocks. So folks, stay tuned. Stay tuned for another great hour brought to you by David White, your favorite polar bear. Tom O'Brien after that. And then I'll be back with you tomorrow morning, 8 o'clock. I'll make that show as pertinent as I can for the 1 to 2 o'clock hour. Thanks so much for being here. Thanks for the calls. Thanks for the emails. And have a great day.